Hey guys, welcome back to the channel. I'm a teddy bear today. No, but for real, I just want to come back on and do another video. I gave you all an extra video this week. It was just a little pop-up video. Make sure you check it out if you haven't already. But now that you all understand market structure, you know how to identify your higher highs, your lower highs, and all that good stuff. I know the next question probably is, how do I enter? So for this video, I'm going to be teaching you all how to enter into your trades. So let's get to it. Also, I'm keeping it beginner friendly. Don't run away. Entering trades is fun, not scary. All right, let's get to it. Okay, so this video is going to show you how to identify clean, high probability entry zones. I'm going to be using structure, timing, and of course, what the market gives you. Not what you want to do. So basically, if you're still entering trades late or you're getting wicked out, this is for you. Okay? So you're going to learn a high probability zone, where to mark your entries, why timing and patience matters more than confirmation, one trade example broken down step by step, and my top tips for building confidence in your entries. Okay. So a high probability entry zone is not just a line you draw and hope that price bounces from it. It's a zone where price has reacted before or where you expect volume to kick in based on structure. So I don't just look for entries, I look for reasons based off of structure, breaks of key levels, liquidity sweeps or rejections, and of course, time of day, because timing 100% matters when you're trading. So let me show you how you can mark up your zones as a beginner. We're going to start on the higher time frame. As you can see here, we're on the 1 hour time frame. 1 hour. So we're here on the 1 hour, and we're going to look for areas where price reacted several times. So here, looking at what the market is giving us right now, what my eyes are drawn to is here. We have the market reacted here, reacted here. Each time it came to this line, it rejected each time. As we keep going, remember, price isn't perfect. So it may wiggle outside the lines. So here we have the market reject as well. Then we have the market break through this line here. This zone, my apologies. So we have the market break through this zone right here. And it breaks all the way down here. And if you see where I have this dashed line, you see the market comes back to it. And what does it do? It rejects again. And now, currently, here we are back at this zone, this area. So we're going to be watching how price reacts in this area. So that's considered a zone. And I can show you guys how to mark this up. I'm going to, let's see, because I have all my markings on. Okay, so we're going to actually pull up the NASDAQ futures, which again is the same. Okay, So I want to actually mark these zones. Let me, okay, so I still have things on that one. Okay. So here, again, we're on the 1 hour, just like we were with NAS100. And this is the zone we were looking at right here. So we're gonna grab our rectangle and we're gonna mark out this zone. Like so. Okay. So you see all of our reactions in this zone. All of these touches in this zone. So here we are. This was today. We had the market break through the zone. The last example, we were here coming up to the zone. So we broke through the zone, pulled back to retest the zone, and went up. So once you mark it on the higher time frame, we're going to drop down into a lower time frame for entries. So again, this is the hour. This is how it looks up close on the zone. You have rejections here, rejections here. So we're going to drop down to the 1 minute. This was around 6 a.m. when we came down to the zone. So let's drop down to the 1 minute. Let's go back to 6 a.m. and see what was going on in the market. All right. So here we are at 6 a.m. when the market was dropping. Look at that liquidity sweep there. We'll get into liquidity later. So, okay. We're coming down, we're moving down, and we get to the zone. When we get to the zone, we don't need a million different confirmations. 2 or 3, 1 or 2, and you're in there. Because if you wait for too many confirmations, you're never going to get in. You're going to miss the move. And if you take the early entries, you're going to get wicked out. So here we got to the zone and we have rejection, 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 doji, rejection. And then we have, what's that? An engulfing candle. This candle is way bigger than this candle. So we have that engulfing candle at a key zone. There is an entry. So a good zone, it gives you confidence, not fear. So seeing this engulfing candle after seeing rejections from a key level zone, that should give you the confidence to enter. So usually if I feel unsure, I don't enter, which is also a part of my strategy. So entering into this trade, let's say you see this engulfing candle and you see it pull back midway of the candle, maybe retesting this wick here, pushing up. That's a trade in itself. However, the market comes back to the zone again. Rejection, rejection. Get that candle. And then we move up and we continue up. Look how far we are from that zone. Could you imagine that entry? So that's an example of a key level using the higher time frame, dropping down to the lower time frame for your entry. So if you're still trying to figure out your entries, here's what I highly recommend. Stop switching your strategies. Master one zone type and do it over and over and over and over again. You can use TradingView in replay mode to kind of train your eyes, or what I like to do is I like to not back test but forward test. I like to watch the actual market in action every day. You can also record the market, and this can help train your eyes to see different things. Another thing, you have to be patient because the best setups, they don't feel rushed. Like you can tell when it's time for it to happen. Just don't rush your trades. Also, these levels you can have many of them. So you don't want to trade every level. You want to see which level has the best reaction to price and wait for price to come to you. And don't get upset if you miss the move. High probability means you were supposed to wait. That's the discipline. So once you master entries, trading becomes way more chill because your entries are a lot better and you're seeing less drawdown. You're more confident in your entries. So you're not chasing price and you're not guessing. You're waiting, then attacking when it lines up. So I break this down even deeper inside of Uncut and Raw, Clueless to Consistent. But I hope this gave you clarity on how we, really trade out here. So this was just supposed to be a quick little video just to show you guys how to enter into trades and get the ball rolling. Get in the market, play around with it, not with your real money if you're new. But get in the market, watch the market, learn the market. That's how I did it. Every day. Watch for patterns. You'll pick up on them. So